Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, July 1, 2024. We are looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? We have what's called a fresh new start. We have a new month. It's a new week, by the way. It's a new quarter, and it's a second half of the year. We talked about this to close out last month, quarter, and half year. This is a new beginning of the same ilk. Just getting a sense from a longer term or weekly chart perspective, what do we have? She's been running sideways for the last 3 or 4 weeks in a row. Nothing more, nothing less. You have little tiny tails on the weekly chart. We're not going to make even heads or tails out of that. We're just going to say she's running sideways, eating time off the clock. The weekly chart, while above all the moving averages, trend is your friend. She is a little bit extended from home base, but in the uptrend. Home base, of course, is the 20-period moving average. Late last week on Friday, made an attempt to get to the prior week's highs. She did, in fact, peek her head above by a few pennies and had an interesting intraday reversal. However, again, above all the moving averages, trend is your friend. She's just underneath the 20-period moving average, made a new high on Friday and a new low below Friday's low today. Can we make heads or tails out of that? Above all the moving averages, she's really just going sideways, eating time off the clock. We have a few important things below current price that we will denote. We have, of course, the 20-period moving average. We have, of course, the trend line stemming from the long-term picture. When you go to a monthly chart, you can reel back the tape and you can see from the October of 2007 high connecting the high from 2022. This is the trend line we've been discussing for quite some time. And then the next thing down would be the last breakout area in the sequence, that being 533.07. Better write these things down, put them on a sticky note. Getting the assessment from other time frames, shorter term charts, the half-day chart or 4-hour chart. Is that telling us any different? She's basically been riding the 20-period moving average. You have a tail here. You have one of the textbook signs or signal of a trend change on the 240 chart. So far, there's no rug pull event. There's what we call in the trading parlance a little bit of buoyancy in the market. What does the 2-hour chart tell us? Well, you can look at this objectively and say, look, the 50-period and 20-period moving averages are converging. That's what's going on behind these candles. And basically, for the last 4 or 5 candles in a row, she's been running sideways, eating time off the clock from the move lower from the new high on Friday. Fair enough. This is the makings of a bearish, flaggish, wedgish situation. Here's the hourly chart. Doesn't look the same as the 2-hour. It's kind of similar, if you will, but the 2-hour tells a better tale, if you ask me. Convergence of moving averages, 20 and the 50 again, riding the 100-period moving average. What happens giving up 3 of the 4 moving averages that I watch? She's bearish, not bullish. Right now, we'll call it a neutral stance, riding the moving averages. Riding the moving averages. Doesn't matter which chart we look at, that seems to be the current theme. You're back to the daily chart, and something important comes to mind, and the question is, hey, when the market's just going sideways, how can you make any money? And that's a great question. And going sideways from a daily chart perspective is one thing. From an intraday perspective, there are generally trades to be had. It's a whole nother thing from an intraday perspective. But the third thing or third wheel is swing trades. We have had a lot of swing trades have exit targets over the last few days. That means that we were already in them and have booked a profit while the market was going sideways. We're clicking off profits in the swing trades. How about a case in point? How about Humana? Humana booked a profit on Friday, 373.10 from an entry down at 321. This wasn't the only exit. We had exits along the way, but this was already a risk-free, emotionless trade. 51 points or a 16% gain from entry to exit on Friday. Nice trade in Humana. How about JPM? Bought them at 192 when nobody wanted her. Turned around, went back in the other direction. How about a profit target this morning? 205, 204, up in that neighborhood. They were actually above early this morning the actual profit target. It was a little bit of a gap and go situation. About 12 points, give or take, in days in JPM. Not too shabby. How about AutoNation? Profit target today, turning it into a risk-free, emotionless trade. Entered the trade just days ago, last week, down at 156 and change when nobody wanted it down there. The lazy swing trader automagical algo system. Keeping on. What about inside the numbers today? The market was rather slow this morning, rather quiet. We did have numbers. Let's go see what we had. We had an early pivot, 544.80. We had some overhead resistance, if above the pivot, 546. Right of the vertical is today's activity. As you can see, 544.80 is the pivot, was the pivot. She kept coming back to that number, whether above or below, pretty much all day long. That's by definition a pivot. Never got up to the overhead resistance number of 546, came close into the end of the day, and the first candle of the day, about equidistant. First candle high was 545.86. Last candle high, 545.88. Funny how that works. We had a morning schematic. I urge you to pause the video, read the notes, go back to the chart, and double check the work. Net, we have our early pivot, 544.80. They've got to stay above for the bull case. If they're not above and the bear case is activated, the door will open to run a test of Friday's lows at 542.95. Below the pivot they got and run a test of Friday's lows they did. Bounced off of it 2 times. It's like a double barrel bounce. We had unfinished business all the way down at 542.30. Not that far away, but interestingly enough, they never got there. It's of note. It's a puzzle piece. It's on the table. I was a little miffed this morning when they left it alone. We did have a spike the low and rip it back up in the other direction. I was waiting for the spike the low, get to my number, and rip it back up in the other direction. Again, with the 546, they never got there either. But we had our morning schematic on the board. By the way, service announcement, Wednesday, the live room will be moderated by Jordan. Inside the numbers will be closed. It is a half a day Wednesday in terms of markets. And then Thursday is the 4th of July and markets are closed. FYI, service announcement. See what else we have as the day gets underway. We have 9:15 hovering right above the pivot. Well, before that, we had the 8:45, what's the scoop? Everything was here, the pivot, where to go on the upside, where to go on the downside. They had some unfinished business, spike the low, the design of a trade, how it all works, the morning schematic. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work because it's all in here. We talk about it in the live room in real time. We learn about it, the things, why this works, how this works, specific numbers, specific areas, why they exist. Which charts do we look at? Do we look at a 5-minute chart? We're looking at a 2-hour chart, a 3-hour chart, a 4-hour chart, a 10-minute chart, a 15 and hourly. We look at all the charts because each and every chart tells its own story. When the story coincides from chart to chart to chart, we have the makings of a trade setup. We did have some stocks on the move today. We had GameStop and MU, Micron. Boeing was a third. It didn't hit its entry objective. It took off in the other direction. It's off the board. GameStop getting a little bit of a buzz cut at the open. We had a zone. 2305 was number one. Number two was 2225. As you can see, they never got to the second number, but before they did, they gave us the deal. This is in the live room. These are traders that took this trade in GameStop. They gave us the deal at the first number. The high in this candle, for example, 2350. It's well in excess, in fact, more than double our minimum required base hit. So that is a completed effort. The numbers work. How about MU? No, MU. 129.15 down to 127.89 was the zone. They hit the zone. They tested the zone. They bounced back from the zone, providing the minimum and then some required base hit. The numbers work. Now, what's going on over in Camp IWM? As you can see, Friday, we talked about this beforehand, 203.75 was a target. They spiked it. They got above, they closed below, and today they then gave up the moving averages, the convergence of those moving averages that they just recaptured on Friday. It's interesting market behavior. You have a wedge-ish thing working here, but you also have higher lows. You have a low, you have higher lows. That's bullish. You have a wedge, you have a move down, and then you have a bearish wedge-ish formation. Doesn't mean it has to go down. It means a lot of times these patterns do play out to the downside. So you have conflicting information. You have market divergences today. The IWM or small cap space is my favorite market leading indicator. The transports, which we'll get to in a moment, are my second favorite market leading indicator. My favorite leading indicator was down today about 0.8%, while the SPY was up 0.2%. This is a divergence. What does that mean to me? Well, divergences will resolve themselves 100% of the time in one direction or the other. We just don't know in advance which one. So either the S&P is going to come down and follow suit if we're getting leakage, if you will, in the IWM and transports for that matter, or the IWM and the transports are going to turn around, flip around, and go back in the other direction if, in fact, the S&P, for example, eating time off the clock in a bullish formation. One of these divergences will resolve themselves. Here's the weekly chart, and here's the question. Do we have higher lows, for example, and this isn't the only low, we just have a series of higher lows, so it's depicted like this, or do we have a series of lower highs? You have to be the umpire calling balls and strikes, and therefore, whenever you see lower highs and higher lows, you have, and this is just a rough draft, you have the makings of a triangular situation on our hands. And that being the case tells you, and this is into the future a little bit, it's not tomorrow, it's not the next day, but when the market's out of time, she's out of time. And that is the apex of the triangle. And we've looked at this in other markets, like the transports. That doesn't mean she has to get to the apex, but it means above the top end channel, she's bullish on a breakout, and below the bottom channel, or bottom triangular line, if you will, she's bearish for a breakdown situation. From a trading perspective, if you have an unclear situation and you can make a case for the bulls, you can make a case for the bears. This doesn't necessarily apply to the IWM. This applies to anything. If you can make a case on either side of the tape, then there's not enough conclusive evidence technically for you to do anything, to allocate your capital, to put it at risk until you have a lopsided argument for either the bull or the bear case. But when you can flip a coin, there just may not be a bona fide trade there. As a trader, as an analyst, you have to be willing to recognize that. You have to be able to recognize that. That's an umpire calling balls and strikes. Write that down, put it on a sticky note. Another triangular situation. What about the folks down at the transportation department? Almost got up to that number on Friday. We talked about 15,560 something. And what else did we have on Friday? We had an on-time type of situation. You have lower highs. Market made a recent low. They're in the middle of a range. What's the range? Well, you can see it more clear from this triangular situation. They're in the middle of this range. Break out above the top, break down below the bottom. There's a lot of points in here. This is a weekly chart. You're right up against the convergence of moving averages on the weekly chart. So we know that above those, she tilts back into the bullish camp and will do what? Will promote a move toward the higher portion up here of this channel, toward the higher trend line. Staying or contained inside the convergence of this 50 and 20 period moving average tells you what? They're more prone to either stay towards the middle or leak to the lower portion, or at least in that direction of that triangular pattern situation. A little bit better picture of the transports from a monthly perspective. When time is up, time will be up, and this will break out on the upside, or it will break down on the downside. Sticky note material. What's going on with the Q people today? Up almost $3, about 0.6%. Anything wrong with the Qs from a longer term perspective? Daily chart above all the moving averages. Trend is your friend. Weekly chart well above even home base. Trend is your friend. 3 or 4 weeks in a row, eating time off the clock, near the all-time highs. There's nothing wrong with the Qs. You take it at face value. Can they correct? Can they correct down to the 20-period moving average, even below, fill a gap down here on a couple of 3-day shakeout operation? Absolutely. Does that change or materially change anything on the tape, on the chart? No, it does not. Normal garden variety markets do correct from time to time. It is how the market works. What about the financials? Anything doing here? Riding the moving averages up 9 cents. We're not going to make a federal case out of this. You stretch it out a little bit. You look at the weekly chart. Riding the 20-week moving average. Above, she's bullish. Below, she can certainly correct some more. $40.36 is important. Has to hold that for the bull case to continue. And obviously, furthermore, above the 20-period moving average on the weekly chart. This is a bullish chart. Eating time off the clock. Building energy before the next move, the XLF. About a recovery situation from the SMH people today, Philadelphia Semiconductor Index. Why do we watch this? Because it's a great proxy for the tech space as a whole. This was down earlier. Semis were getting thrown out with the bathwater. We had intraday opportunities with NVIDIA. In fact, let's take a look at that first. 15-minute chart of NVIDIA. As you can see, here's a zone today. They spiked it pretty good early in the day. All the semis were getting thrown out with the bathwater. 120.40 down to a spike of 120. There was another number up here too, but this was a zone where they should have and did bounce back in the other direction. We had plenty. Those are good and plenties. Plenty of participation in the live trading room. Back to smash mouth or the SMH. Eating time off the clock in a bearish, flaggish formation, riding the 20-period moving average. So until or unless they can break the chain, and we'll say get above this high from Friday, until they can break the chain, this is bearish for another move lower. Where does the next move lower find support? First place of interest, 250.85. Write it down, put it on a sticky note. They break the chain above Friday's high, 226.40 sticky note material. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I am David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.